Social media has been a hot topic lately, and Nicole Erkin, Jim Cramer's research associate, has been digging into it. Nicole, social media was really a hyped up sector going into all these IPOs, but what's changed?
Ultimately, the companies went from being just companies to stocks. And when it comes to stocks, valuation matters, monetization matters. A great idea, a transformative, disruptive social idea isn't really enough once it's a public company.
Now, Facebook is obviously a lot in the news right now. It's one of the biggest ones. It went from this IPO darling and growth story to trading at half of its IPO price. What's the problem here? Can it get back to the IPO price?
Yeah, certainly there's a lot of skepticism with Facebook right now. And to be honest, there really was more skepticism at the very start because Facebook came at the tail end of a lot of the IPOs that had really come off of their highs once Zuckerberg decided to finally let his company loose to a certain degree. Facebook really is struggling with a monetization strategy, and it really comes down to mobile and ads. And they're not really providing answers or clarity, and the stock is suffering. Of course, also there's a lot of insider selling, which has been a focus of late, and there's more to come.
More to come. Okay, Groupon, another stock. This one's been struggling. It's had trouble making earnings. What's the story here?
Yeah, Groupon, the latest quarter was a little bit laughable. The CEO, Andrew Mason, pointed to European troubles, and ultimately it comes down to a flawed business model. You know, when Jim Cramer, is about to call him Jim Zuckerberg, when Jim Cramer is getting offers for Brazilian waxes, you know that there isn't really a good targeting algorithm. You know that when you're getting deals from a number of different sites, there aren't really high barriers to entry. Groupon has really had a lot of issues with its metrics. They were presenting income, excluding certain expenses. There's just a lot of confusion with the stock. You know, ultimately all of these stories, they're changing the way that we interact. They're exciting, they're dynamic. But now that they're public companies, it comes down to valuation, expectations, understanding of the earnings model, and that's not really there.
So are there any companies that you would look for with cheaper valuations in the space?
Yeah, if you look at names like eBay, which PayPal is a great play on mobile, Apple, which is obviously the mobile darling right now with its iPhone 5 expected soon, and Google, which is trading at a very reasonable valuation and also is a great company with a lot of growth prospects. Those are the three that I'd be looking at right here.
This market has fewer players.
We're coming into a Monday where we're going to
would enter in a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things
Apple
on Wall Street.
reported earnings.